Yeah, you know what? Let's go there. Let's talk Blackstone because we were the first to tell you about it yesterday. It's a story we've been covering for quite some time here, namely the growth of this B-REIT at Blackstone, a very important component overall of really their fee-related earnings at the company. In fact, this morning in a downgrade, Barclays saying as much as perhaps 20% of fee-related earnings related to that $70 billion portfolio of largely what is either industrial or rental assets, essentially. That's a downgrade we're seeing this morning. And this follows on what we told you yesterday, which is, and by the way, was part of the B-REIT fund from the beginning, but namely said, hey, you know what? If during any quarter more than 5% of our net asset value wants to be repurchased, in other words, rebuy your interest back from you, or over 2% in a month, they have the right to say, all right, we can't pass through that. And so they put that out there yesterday, and there has been, Jim, just a torrent of sort of interest, I think, at least in certain circles about this. A lot of research this morning. Of course, I mentioned this downgrade from Barclays. Let's just give you a quick recap of what they had to say at Barclays, if we can do that. I'm looking for where my notes are there. Here they are. Yeah. We're downgrading equal weight, represents, as I just said, 10% of FEA AUM, but 20% of fee-related earnings, give her the higher fee structure as well, and the profile of the product. So with redemptions now being limited at B-REIT, they're increasingly concerned that the NAV may continue to decline as investors are likely to seek to recall their capital, and that may have a second-order effect resulting in significantly lower net inflows, right? The net inflows here were enormous. I was pointing them out in a number of reports over the last year. $3 billion a month back in the spring. That's incredible. Because it represented at that time, you remember where the 2 and 10 years were. You get five. Your RIA, high net worth broker.
Look, Barry Sterling had a vehicle.
Yes, S3
really backfired.
Here 5%. You're going to get some. You'll get some nice return. Also, we're going to increase net asset value. And by the way, they have done that. They have increased net asset value, or at least certainly they have said they have increased net asset value. But there are concerns, or at least some question that, well, you're going to have to reverse that at some point, because when you look at, for example, the publicly traded REITs, the IYR as a representative of them, it's down. We know what's happened to many of these. Now, that said, they did a deal yesterday for this Vici, which will help them create liquidity, yes. Right? They sold a significant stake, Jim Grad in the Vici deal. They did it above where their mark was, and it will allow them to meet further repurchases. Not yet, but when the deal closes, it creates more liquidity.
Too. Look, I want to just say, point blank, if you read any of the, it's not even fine print, large print. We are not obligated to repurchase any shares and may choose to repurchase only some or even none of the shares that have been requested to be repurchased in a particular month. This is big print. This is not, David, oh, my God, I didn't know.
Right.
This is like, okay, here's the deal. You may not get your money out the way you want to. So, the people who are in this thing, it was the most caveat emptor piece of paper.
But it also was a way to generate yield in a yield-starved environment. And it became, as the reason we talked about it so often was because it became such an enormous, one of the largest REITs out there in such a short amount of time. So a great product for Blackstone, helped to generate a lot of earnings at the company, but that obviously has changed. I'd asked John Gray about it previously. He didn't really have too much to say the last time we spoke about it publicly at our Delivering Alpha conference back at the end of September. But they do market every month. If you were able to get out in October, you may be benefiting as a result of that, because the mark's every month, and we'll see where they are. They sold $5 billion in assets at a premium, again, to where they were being carried very recently with this Vici deal, and they're managing the liquidity well. It's not an issue of that, but it is simply a reflection.
Do you think it's Schadenfreude? There was a lot of people I'm in awe of Jonathan Gray, and not only just for what he's doing here, but also for his charity. And I don't think this is kind of what you should have expected. Mortgage rates shot up a lot faster. I'd like to know who doesn't trust and thinks that they're going to default. Isn't that what people are worried about? Is Blackstone defaulting?
No.
Or it's just the rates?
It's just that, listen, it's not a great look when you don't let your clients get out. That's it. But it's not about anything more than that.
Okay,
really
that's
isn't.
fair.
Yeah, we're not talking about
it. The stock yield's only 4.4.
Right. And it's not an expectation that many people didn't. Well, it was potentially something people had thought might happen here. And again, let's wait to see what some of the NAV is. All right.